Hey, good morning, everybody. Good morning, good morning. Sledge, it's early out there, dude. Whew. Francois, George, Don. Um, hey, everybody. Good morning. Kimberly, my lovely wife, Arturo, Donald, Valerie, Larry. Good morning, all. How's everybody doing? Doing good? Doing good? All right. Yesterday, kind of a choppy, little bit of pullback day. Not the most awesome market day for a Monday on a Tuesday. Just kind of is what it is. And, you know, we get along. Anyway, let's flip over. All trading involves a substantial risk of loss, past performance, not necessarily indicative of future results. I mean, I may never get one of these right again. This presentation here, intended to be informational, educational, and fun. It is not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, you got to hire and consult a financial advisor. Goose, glad to see you, my man. Retired Lieutenant Colonel Goose in the house. Jason Maurizio, good morning, everybody. And I came to talk about algos today. I briefly touched on this during 30 MA, the 30 moving off. No, 30 minutes of awesome, not the 30 moving average. 30 minutes of awesome. That's the request show I do on Tuesday evenings. I briefly touched on the algos, and let's kind of bring it over and talk about it today. What this might mean for the markets. So right here, global, this is CTA, computerized trading algo, not commodity trading advisor. When you look it up on the line, it'll say commodity trading advisor. We're talking about computerized trading algorithms. The news I read, CTA abbreviated, means computerized trading algorithms. All right. So global CTAs, if we get a small up, we're going to get a big up. If we get a big up, we're going to get a big up. And this is the markets in general. If they start moving up small, the CTAs are going to load up. And that's from zero here, we're talking about $150 billion going long here. We get a big up, $150 billion long. We get a flat market, we're looking like $100 billion long. We get a small down, we're looking like about $50 billion sell. Maybe a little pop and then a drop. This is looking at 1 month out. Well, yeah, looking out to October. Here's September. We're kind of 1 month here. And then big down, actually a little pop, and then sell off probably close to 100 billion. So that's, well, cool. Another software update. I love this. Yeah, that's the perfect time to update during the middle of a broadcast. Brilliant. Anyway, I have to click on that later, I guess. S&P 500 now. This was global, circling down to S&P 500. 1 month. If we're up small, this one's not indexed to zero, so a little bit different here. Zero will be down here. We're already up pretty big, and sitting right here about 25 billion. So we'd look like adding about 20 billion more to the S&P. Up big, up small, and flat. So algo is set to buy about, even in a down small, buy. Even in a down big, buy and then sell. So, yeah. And Goose says, I think we have had a CTA discussion every day for the last year, and the question is always one of piling on versus setting the direction. We're only talking billions of dollars here, versus fund flows, which are hundreds of billions of dollars, and those are almost always buy. I think that's why you're seeing almost all the conditions here resulting in a buy. All right. Now, we'll talk about this in the span of that little, I left that upgrade thing flashing. It's like flashing on the screen over here. Upgrade. Anyway, I pulled it over the other screen. Catches my eye. So I think you have to take a step back. Algos are just one little piece of the broader market. Now we say, upwards of 80% of the market volume driven by algos, and that, 80, 90%, that's probably true. And these are going to be CTAs that are like fund manager CTAs. All right. These are not going to be like CTAs like retirement fund manager CTAs. So these are the ones that like Bank of America tracks and Goldman Sachs tracks, because these are the ones they try to rip. Like, this is the game of ripping. But just keep it in mind, if we get even if we get a small down or a big down in the market, these CTAs are probably going to buy, and then it's going to accelerate down. So the down may be muted, and then it may accelerate is the lesson here. And if we get up, like if we go up from here, CTAs could load up pretty good. Seems there's upper limits on the buying that they think the CTAs will do. Upper limits on the exposure. So, interesting. Now, rolling into something else I want to talk about. VIX seasonality. Here we are into September. Usually, we see this right here. And then we get a big drop. Now, if we correlate this more tightly to this year, this is taking the last 20 years, just throwing it all on a chart, averaging it together, and this is what we get. Now, if we take the highest correlated years, that means years that are roughly the same price action that we've seen this year, only years, and we tie it, we get something that looks more like this. I didn't create this chart. I stolen from others. But this is interesting right here. We've seen some diversions in the VIX. It's had some pops and fits and all that stuff along the way. We've been 175 calendar days since the last 15 to 20% drawdown in SVXY, that's short VIX. And short VIX is going to pop when VIX pops. I mean, short VIX drops when VIX pops. Get the right way. Short VIX actually climbing right now as VIX is descending. So here's the opportunity right here that we may see as we roll in, September. We don't have a ramp into September right now, but we could see a pop and then a drop toward the end of the year. So right here, we could see a ramp into September. It's possible. As you can see, this year is not like right bang on the historical average based on correlated years for the price action. But it wouldn't surprise me if we did see some lightning. Now, how might that look on the chart? Let's go talk about it. Pull up the S&P chart. Here we go. So, the three paths that I've seen kind of likely, and we got like 6 minutes till the market opens. My highest probability path, the kind of one I'm expecting, may be this one in the middle here. All right. I'm just kind of guessing we may see a pop up to 45.60 area, then a drop back down to 44.30, and then we launch out. This could be you notice how that kind of matches the algos. So we may see that. That was kind of my primary expectation. It's been my primary expectation for, a week now? Something like that. And basically ever since we got up in this zone. We've been here 1, 2, 3, 4, 5, 6 days now. 5 days, 6 days. So we may pop, we may drop, and then ramp. Now, if we get below about 44.60-ish and that comes from this chart right here, this high, we get below this 44.60, odds are pretty high that we're going to see this. All right. Just want to be clear. Those are the kind of the paths forward here. So those are the two probably highest probability paths forward, is this one or this one. And then there exists the smaller possibility that we just go blasting on off. Like we don't do any kind of correction at all and just go ramping off. This was a big, fast, sharp up, and we may need to correct it a little bit. Either, well, a little bit or a lot of it. One way or the other. All right. So that's the S&P 500. That's just the broad general market direction. I look at the S&P as the broad general market. It's the most kind of balanced swath of the market we have. All right. As goes the S&P, as goes like 90% of the boats go with it, you know. Rising tide floats all boats. And yeah, so a drop can get us the VIX spike that is kind of predicted on the other chart there, the seasonality chart. Get myself all trying to keep my thoughts straight here. So we saw a VIX ramp. It rejected off the roadmap line, right back down to the support box. This is kind of historically 20 is the resting spot on VIX. Like if you go back the entire history of VIX and modern times, the resting price is around 12 to 13, which is the orange box down here. More modern times in the land of shorting VIX, this zone right down here tends to be the bottom. I don't think we've ever seen it below 10. Oh, maybe right there briefly. Just briefly, we saw below 10 before the VIX, short VIX explosion. So unlikely to push below 11. Now, one of the things, it's smart to buy VIX when you can, not when you must. Now, if we get another pop in the market, we push this on down into the below 13 area. It may be smart to jump out a few months, 2 months, 3 months, and buy some VIX, actually VIX calls. Now, you want to be very vigilant on those. If we get the pop, book your profit, because the biggest winning trade this year has been short VIX. All right. Let me pop that back up, and this right here, shorting volatility remains this year's top performing trade, returning more than 100%. All right. That's just a 1x short VIX futures ETF, 1x short. 1x short. So let's keep it in mind. The S&P down here, pretty fair return, 20%. But shorting VIX has returned almost 120% this year. Not too shabby. All right. And you can see that right here. Returned a massive gain this year. If we can go from year to date up to the top, 60% just if you were holding SVXY. Not too shabby. Right there. And that's what I was talking about. It's been about 175 calendar days, about 120 trading days since we've seen a major pullback in VIX, right? A major pop in VIX, major pullback in short VIX, SVXY. Now, why do I talk about the 15 to 20%? Because look at the regularity. This has happened all these times, rather frequently, up until now. And we've had this giant run in short VIX and no pullbacks. Now, short VIX did fall from the sky right back over here. We had a split that has adjusted these numbers. It's kind of funny. We had a split before and after. We did 2 for 1, and then we did a 1 for 4, right? Before and after, the giant drop. Now, COVID right here. Got to be careful. But we're sitting above COVID levels on short VIX. So this is a volatile sucker to play with. But short VIX keeps winning the day. All right. Now, S5F5. There's the market open. S5F5. To take this one out of log. S5F5 potentially going to bounce right off of the reversal zone here. We'll see what happens today. We are opening down just a bit, 10 points, holding above that zone I was talking about, the 4460. Zoom it up. Look at it. I want to hold above that 4460 line, that line in the sand right there above that high right there. I circled it. I want to hold above that high, and we want to find support and move up. So we may push down a little more today. Got about 20 points of room to go down, 25 points. Then we may find support and bounce. All right. You can see it in ES. You can see it in Q, which in Q is actually holding up really well, not retracing much at all, and may just launch out of here. In Q again may be leading us out. Big tech been the leader all year. Oil, Russell, right back down to the roadmap line, potentially holding and bouncing out of here. Holds that zone. We're going higher. If it breaks down below 1870, going down. Oil was beautiful. And like I was speculating last night, we may see a bit of a retrace. Came right up to the first target, the conservative target. We may see a bit of a retrace back down into this 85 zone. And then we may get the bounce up into this 89.50 area right up here. And my super aggressive, extra aggressive target up here around 93.50 to 94, right up in this zone, right in the zone, auto zone. Heard that commercial a bunch. I don't even know where either. So right there, we double topped in October and November. I got a feeling we're going to go retest that. Got a feeling. Now we may come up short. We may only get to 89. That's why you got to be careful. This is the super aggressive target right up there. Super aggressive. All right. GC continues to chop around on the dollar, popping. The dollar looking like it's gonna, like, we get another day or two close above this reversal zone here that was the reversal in May. We get another day or two close above that. We're probably on a path to go retest at least the 107, if not the 108.85 area right up in here. And then watch out for a bigger decline that could last us well into late next year. That could correspond with Bitcoin ripping too. Bitcoin continues to consolidate at the bottom. We may need one more little baby flush out here. Want to hold above that low, but we may spike down and get below it and then reverse. I'm super cautious on Bitcoin right now. Ethereum may need a little flush a little bit lower. One more flush out to clean out all the riffraff, if you will. Big opportunity right now. AMD. This one, if we hold above this low at 100, it is now set up the potential to go up here and visit this 150 area. 140 is the conservative exit, 150. This thing is an aggressive entry here, more conservative entry above 124. I just wanted to share this morning because this one looks pretty dang ripe. Pretty dang ripe. Now, we get below 100 area, maybe 90. I mean, it could go down to 97-ish. Get below that, we're probably on a path back down to the 75 to 80 area right down here. So that's your line in the sand there, right around 97, 98 maybe, right here. We get below that, probably going here. Otherwise, we break above this, we're probably going up. Like this is like high probability stuff here. We break above, this is the aggressive entry above this high right here. Conservative entry up here. Looking for this big move up in here. I just want to throw that on here this morning. It's one that came across when I was looking through stocks yesterday. So AV, what a pop. Right up to resistance, 119. Potential retrace and pop again. Potential to do this. And then extension. 127. That was beautiful right up to the target. I mean, That was one you had to have faith and buy, and would have paid you out. Beautiful, beautiful move. Roku, potential to get extensions here. The next resistance up is up here at 140. DXCM popping, even though that looks pretty dang horrible. Yeah. Looks like it's going on a deeper retrace. When we zoom out, I always tell people zoom out and get the feel. Like this could be a measured bounce. I'm not going to be liking it till we're back above 118, back above the roadmap line area. And it could be set up for a bigger move if we do that. Throw this out there, throw this out there. That bigger move. 170, possibly 190, maybe 215 even. Pretty nice chart. First solar. Still looks like it needs one more little flush down here, but that could have been it. I mean, it looks 1, 2, 3. Yeah, probably gonna get one more little flush. It would look best if it did this, or even down to here. Then did that. GitLabs, nice pop right up to resistance on earnings. If it can't break above, it's probably going right back down. NXGN, that one's been on a few people's big mover list. It's coming right up into these highs from before. It's got to get above that to keep going. Oh, I guess it is above that right there. Didn't see that little bitty speck right there. Little bitty speck. And watch out, if it goes exponential, this pops crazy big, they come right back down. And we do have these prior highs right here where we've met some selling before that we're right into. Just right into that. Looks like it hasn't ever been above that 24 area. So watch out for some resistance at 24. We get above that, the sky's the limit, kind of. Crazy stuff can do crazy things. I mean, that was a crazy big, almost went out of business. And yeah, that's not any kind of patterns I follow. I mean, that's just choppy, sideways, nasty, gnarly, popping up to resistance. Not the kind of thing I like to trade. Let's be honest. That's kind of authorized gambling in the stock market right there. All right. This one. Then jump out to a weekly. Get the. Oh, man. Nice bullish move, but golly, that's got some stuff to work through. That is one big move up off the lowest low in this whole trend. It's going to retrace at some point. The retrace will tell us how likely this is to keep going. I would not be buying this until it did the retrace. And it could come up to here, 15, before it does the retrace. But it's not on my watch list till we get the retrace. I like trend pullback continuation patterns. I don't like to just gamble. I need the trend to establish. And if this thing is doing this and we get a pullback that supports some, trend continuation, and then we get a resumption of trend, that's when I load up. All right, that's the pattern I look for. I don't like to just gamble on reversals unless it's super high probability, like my measured bounce setup. It's very defined. All right, in my MITK, another one that looks pretty gnarly. Now that one, that's probably hitting extensions now. That one has had some pullbacks in here. Yeah, right after the 1618. Now retracing, may fill that gap before it goes again. If we get a reasonable size retrace off of that pop, Yeah, take us right back down in here. Then we can get another extension out. That next extension out takes up to 15, probably. That's how that works. All right. HQY. The list isn't very long today, as you can see right here. HQY. Just choppy, sideways, nasty, gnarly. Look at that. What? Don't get involved in stuff like this. Even if it was the biggest mover today. Your upside's, like, history has told you that the upside is limited. All right? That's what I keep seeing on a lot of these things. And then Enbridge right here is telling you that this is going in the toilet. This is a dumpster fire of a chart. Not a dumpster fire of a company, just a dumpster fire of a chart. Look at this. I mean, where's the bottom? Whew. We're already pushing the 33 extension off of that last touch of the roadmap line. Pull it down to this one. Confluence, 33. Can it find a bottom at 33? Yeah. Could it find a bottom at 30? Maybe. Could it drop on out to 25? Yeah, it's all possible. That was 5 up. We could be doing a 618 retrace. Let's see what that looks like. Still a bit lower to go. 32. If we can hold 32, that can be a bullish, bigger bullish pattern. That was 1, 2, 3, 4, 5 potentially. 1, 2, potentially a 3-wave down, which looks like this. Could push us out to 30 even. So the support zone right in here. Want to see that hold. Then we break back above the roadmap line, and we could be set up for a much, much bigger pattern if this is playing out. Long-term trade here. Let's just speculate. Let's just say the 100, an echo of this first move down, third move down. 60 would be the target. So double your money from 30 to 60. It's going to be a longer term move. Probably something like that. You look at the projection here. See this move over here. You see how it's roughly the same. Probably do that roughly the same. So what is that, out into, I don't even know, out in 2026 maybe? Not a huge opportunity for a big fast move. Could move faster, but all right. Zscaler, just chopping around on earnings. Standardized lost money, reported made money. Ugh. Beat on the top, beat on the bottom. Not really popping. 172, 183 on the upside. Watch for it to reject and go lower. DBG. Oh my gosh. That one's pretty horrible. Dumpster fire if I've ever seen one. Airbnb was my pick of the week. Posted in Discord. P-Lab. Down below the roadmap line. And could be a measured bounce right there. 1, 2, 3. Measured bounce. Break back above the roadmap line. Probably looking pretty sweet. How high can she go? That would put that target up here around 34. Got to get above the roadmap line. And really, I feel better if it gap filled. Got above that gap fill. Probably going to do that. AMC is probably going out of business. 1 for 10 split. Just to stay listed. And probably going bankrupt. Reverse splits, not bullish. Ouch. Square. Gotta get its crap together. I thought we were doing it, but nope. We made a lower high and probably coming down to this $40 area. All right. There you go. There you go. There you go. Bias for the day. Looking for that little bit of retrace back down to the area. Want that 44.60 area to hold right in there. And it looks like it is so far today. So far, getting a bottoming tail. Nice push down and rejection. See that right there? Bottoming tail. We turn green. Watch out. Probably going higher. The higher is probably limited. Remember what I was saying over here? Probably limited to about 45.60, maybe 45.70. And then watch out for the bigger retrace. All right. Where does that move up right now come from? Oh, Roku throwing up alerts. This move right here, probably going to get echoed right here. That's where that comes from. That first move up right there. That's usually the last move. The first move and the last move usually kind of match. That's where that target comes from. First move right there. Fifth move right there. Right in that 45.60 area. Not rocket scientist. It's all proportions. Once you know how to look for them, these things just show up on the chart for you. All right. Airbnb. I'll mention that one real quick before I wrap up here. Beautiful potential setup. 163 is the target. Talked about it last night on 30 Minutes of Awesome. And there's a bigger, if you go back to the prior pullback, these are nested pullbacks. The prior pullback sets us on the path, potentially up into this zone way up here. Beautiful potential. And it really needs to be on a log scale. When things move more than 50 bucks, I put them on the log scale. Log scale potential right up there. 214, 260, 250, say 220, pretty ideal. I may jump off the boat at like 180, 190, just because I'm going to be sitting on some nice profit. I think we're going higher. 163, 173 may be all we get, though. Just keep it in mind. All right. All right. Have a great day, everybody. I'll be in Discord if you want to come talk or ask more questions. The link is in the description down below. Make sure you're subscribed. I'll go live again tomorrow, talk about what's moving, give you the update for the day. Hope you have a